Right, let's take a look at your market news. China and Hong Kong stocks closed lower on Thursday as traders maintained a cautious stance on signs of weak recovery in the world's second largest economy and a lack of strong stimulus. Data on Wednesday showed annual profits at China's industrial firms extended a double-digit decline in the first 5 months as softening demand squeezed margins, reinforcing hopes of more policy support to try and bolster a stuttering post-COVID-19 economic recovery. A poll on Thursday showed that China's factory activity likely contracted for a third straight month in June, albeit at a marginally slower pace. So the Shanghai Composite Index was down 0.2% at the close. Hong Kong's benchmark Hang Seng Index dropped 1.2%, and Japan's Nikkei, however, gave up earlier gains to be up 0.1%. Let's go to Wall Street. We know that in Wall Street, the market was quite flat, and we'll get some analysis on that a little bit later on. I'm now joined by Matete Tulare, who is an analyst at RMB. Thanks so much for your time on SABC News this afternoon. Let's start with the US. Why did we see that quite flat market on Wall Street?
Yeah, hi, Nzing. I mean, the US market has had a fairly lackluster session overnight, and I mean, the S&P futures is currently trading a touch higher than when we closed. The markets have largely shrugged off remarks by Jerome Powell during a panel discussion yesterday at the ECB's forum, where he reiterated the fact that he expects additional interest rate hikes in the months ahead and that raising rates at the consecutive meetings is not off the table. Now, the tug of war within the S&P 500's most influential group has been dictated by the slide in the chip makers, which has seen an offsetting advance in the tech mega caps like Apple Inc. and Microsoft Corp. After the closing bell, we saw the likes of Bank of America, the likes of Wells Fargo, that laid gains in the financial market because, they've passed the Fed Reserve's annual stress test, which does clear the way for payouts. And also, don't forget that it is also a quarter-end positioning, which could drive some volatility throughout to the end of the week tomorrow. Investors are increasingly pricing in a softer landing in terms of the recession, and also a re-acceleration in earnings will be required to drive the next phase of the market moves at this point in time.
Matete, when we go to the Asian markets, we saw quite a bit of that caution there, a bit of disappointment coming through that maybe the COVID recovery hasn't been as large as we thought. Just talk to me through that, and then also the quite hawkish remarks from central bankers and what that's doing to European markets.
Yeah, so look, I mean, Japanese markets have led the gains in Asia. We saw the likes of the Nikkei up almost 25% year to date, with the broad-based topics that's up above 20% this year. Already, I think when you just look at Asian stocks, that could outperform the broader global market on the back of solid fundamentals out in China, the end of the rate hiking cycle in Asia, and also the rising traction of artificial intelligence. I mean, already you've seen the shares of some of the Asian chip makers rising in the third quarter, beating their estimates on the back of the high demand for the memory chips driven by the booming AI sector. But the other reasons to be optimistic about Asia include the technological developments such as the AI that we keep talking about, and also the possible end to the rate hikes, and also the markets predicting that inflation in most Asian economies has peaked. Now, you look at the likes of the ECB. I mean, Christine Lagarde has come out to say, look, there's still ground to cover in terms of seeing another rate hike in July should the baseline projections hold. She's also said the unimpressive economic data out in Europe at this point in time is something that she's still looking at, and also she's brushing off suggestions of a recession. Now, they do refer to the quarter one being flat in terms of growth, but they're also admitting that growth is really stagnant. In support of that assessment, they're saying the uninspiring quarter two data for the manufacturing sector is also something that they'll be looking at. The inflation remains persistent in the Eurozone. Beyond that, they will be remaining data dependent. It will also be meeting to meeting, just like the Fed. And also, the last comment is also indicative that at this point in time, it is going to be seeing how we actually fare out in the next few weeks before we hear further remarks from Lagarde in September.
Okay, when we come to South Africa, the market's seeming quite quiet, emerging from those back-to-back days of closing lower, but not much in terms of company news and not much in terms of movement on the market.
Look, the top 40 has shifted lower this morning. The volumes still remain very light. The moves of an underlying level have been really mixed. Away from our retail sector, which has been where the buying has taken place, apparel names are leading the way. The likes of the Foschini Group up 3%, Mr. Price up 2%. Our dual-listed industrials are also a bit mixed. The likes of Richemont is up 1%, extending yesterday's gains. I think if anything, going into tomorrow, we're going to be looking at the Eurozone CPI data that's coming out. The market expects headline inflation to continue on its downward trend. We're also expecting US jobs numbers later this afternoon, where we've seen that trend being upwards in the past few weeks, and that will actually be keen, especially given the weakness in the US labor market, especially with everyone talking about a recession. And also tomorrow, from a South African point of view, we do have the trade balance. A trade surplus is expected this month, but the overall trend remains towards weakness as commodity prices come off. So that is how we're going to close off the week and also the half year at this point in time.
Matete Tulare, he's the head of Forex execution at RMB. Thanks so much for your time on SABC News this afternoon, just taking us through the local and international market movements. It's time for a short break. When we come back, we'll be taking a look at some international and local business news. Do stay with us on Point.